Welcome, guys. Good morning. It's now Monday morning. What is the date? 19th of August. I'll cover all pairs. What I'll cover right away is I'll actually cover oil right away because we're all in oil, right? And I'll show you what we are looking for. You can see this massive gap. Absolutely fine, nothing to worry about. What you may see is this may come down to this area because look, if I move this away here, and I'll zoom in because I never know how big you guys can see it. What if we got right here, right? We got a fucking perfect zone of what we're looking for, right? And there it is right there. So it may come down and just tip here and fly. And it may mean that our stop losses do not get hit, right? Our stop losses that are mine is now in take profit, but it may mean that it does not get hit and it just flies and we're like happy days, we're at a good price. What could happen, however, is that it may pull down to here and then stop losses will be hit. So it means you're still in profit, right? Just means that don't worry about not closing, when it's bloody up here and blah blah blah. It's totally fine. It's totally normal. If you can close 80 if you wish, but I'm trying to break that habit because I'm just sick of closing it and then like 20% runs and flies, and I'm like, right, 20%. You've made 1,200 quid. If I had just fucking left it, that would have been 30, 40 grand, And as I said, I'm not just basing it on hunches. I'm basing it on me physically journaling every single one of my trades. And every time I've says, did it hit my stop loss? No. Did it hit my take profit? Yes. Did I close the fucking trade early? Yes. And it's pretty much like 9 out of 10 of my trades, if not 10 out of 10, right? So because I'm putting that data to good use, what's the point in making notes if you don't then learn from your notes, right? So I'm holding this. As I said, what may happen is you may get stopped out. We're just looking at that to re-enter and jump back in. If I jump to the weekly quickly, look, we do have obviously this low area down here. It's like a massive area of liquidity, but it always just does a grab there and goes, right? A grab and go, grab and go, grab and go. So, I mean, I don't really see it breaking below this. Anything can happen in the markets. Let's see. If you look, here we go. If you look on the weekly, you've got your liquidity grab here. You've got your engulfing candle. Absolutely fine. You've also got this big surge here and then back down, so it may come down for this retest, pick up more liquidity and then go. All right. So like I said, if it comes back and stops you out, don't worry. If it's a smaller loss, that's fine. I mean, mine's is going to be going from 10k down to about 2k, right? I'm not arsed in the slightest, guys, because we always have to remember we're not basing trading based on this one singular trade, right? We're basing trading over the trades over the remainder of the year, the entire year. We're not all of our cards are not pitched in this one trade, right? And all that's going to happen is we're going to get in even more at a better price. And it's actually better for my managed account because when I entered oil in here, you can see they're quite low. It says volume 15. I also thought that was 15 lots. I thought happy days, here we go. We're going to hammer this. And it wasn't 15 lots, it's 15 contracts. And every broker's different. I'll just show you again. I know I've showed it, but I like to show because sometimes there's so much information to take on board. Specification, if you look here at contract size, it says 1, right? So when I enter this, that's 15 contracts, right? 15 contracts, which isn't a lot. When I enter one trade at this amount, it's opening 15 contracts. If I jump across to Darwin X and we come to oil, look at their specifications. When I enter one trade on here, it's opening 1,000 contracts. You see the difference? The difference is fucking massive, right? And it's just because every broker is slightly different, and you're kind of like, I need to test the waters first, and that's all that's happened here. So if this pulls back, it's still going to stop me out in profit, and then crack on. I'm not going to close it now. Up 480 pips. Sorry, 480 points overall. It could very well just come here, tip this, and then fly. Let's wait and see. So I'm not worried about oil in any way, shape, or form because all of my oil trades are in. They're not actually just at break even; they're actually at take profit. Okay, I don't like to do that, so I don't want to make that a habit. I'm only doing it because there's nothing worse than being super in profit and then walking away with zero in the trade. Right? I would rather it came down if that's the case, stop me out in profit, so I have pocketed some money and then I haven't just wasted, I've just wasted fucking 5 days, kind of thing. And then you just get ready to re-enter again. Okay, that's all it is. AUD CAD. Let's have a look. I don't want to keep covering the same stuff. You can see they always hit our areas. Don't look at, like I said, you can hedge this, right? We already marked it up and says, look, it's probably going to come here, blah blah blah. But I'm just not one for doing hedges. Overall, you can see that the AUD just never beats the CHF. Look, it never fucking beats it. You can see it's came back down, retested this area. Look at how picture fucking perfect that is, lads. And it may come up to here, and you think, well, that was a great trade from here to there. Yeah, you can make money, but it doesn't mean it's going to be a good trade, right? I would just personally, I'm at that stage now. I would rather wait till it fucking hits here, enter here, and then melts again, or better still, hits here and melts again, because that's going to be a solid trade. It's going to be a trade that lines up with fundamentals. It's going to be a trade that lines up with historical data and historical, everything that happens seasonally and so on and so forth, right? So it's just constant. Same again here. Coulda, woulda, shoulda. We could have entered this, but the reason why we didn't is because that was all happening with the Japanese stuff in the markets and blah, 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 right? And nobody knew what they were doing. Even the Bank of Japan were posting, fuck, we don't even know what to do now. We have no idea how to react to the markets now, all right? So when the Bank of fucking Japan is saying that, then you don't want to be trying to anticipate how the world's going to react to that, right? Same again, AUD USD. I want to see it hit here and melt. I just wouldn't sell it from here. It's not nice. I'll just fly through them, lads, because I seem to be repeating myself fucking every other week here. It's just because the markets are just ranging, right? I just don't want to get dulcet and boring. We can see these. It's good for you guys to see that these areas pan out, right? It's fucking great so that you can be like, every time you see it pan out, whether you've taken the trade or not, it builds up the confidence in that system, right? Because you know that we always mark them up weeks before they even get there. Here's your old break, retest, and go. What pairs that? Euro, GBP. Euro is quite strong. I wouldn't trade it because it's just a fucking catastrophe, right? I might just get rid of that. I don't know. I may just use it for observation reasons, but I don't normally trade that pair because it's just horrible. Euro USD. What you may find is see when the markets get into these areas, right? You'll find that there will be news that comes out that weakens the euro and strengthens the USD, and then it will fly, right? Because technicals always moves from fundamental data, and you'll see that happens. So this is a great area to sell from, actually. Great area of value. We just need to wait and see what it does. I'm not a huge fan of trading Euro USD. The same as Euro Pound. They're too similar, And both of them are strong. You're trading strong against strong, so why would you do it? You know what I mean? And we don't trade based on one news release, right? We don't look at that and Euro comes in weak and USD comes in strong. Like, fuck, I'm going to jump on that. We trade based on the wider scale picture, right, of everything. And what's it going to be doing in the next 4 weeks? You know what I mean? What I might start including in my signals, guys, as well, when I take a trade and I put the details in, I might include like a timestamp or a time expectation. So when I put in there entry now, stop loss this, take profit this, and I'll put in like timestamp, 3 weeks, 4 weeks, and I'll include in there how long I'm looking to hold the trade for, all right? Again, it's just not nice. Like I said, guys, if any of you guys ever want to trade this stuff that we give off, look, there it is again, fucking bang on. Here it is here, bang on. Here it is here, bang on. If any of you guys ever want to trade this, you absolutely can, right? That's exactly why I mark it up and I give it. You just have to remember why I don't take all of them is because I'm doing the managed account now, and I don't really like doing counter trend trades on managed accounts. Only because the probability is not in your favor, right, when you do counter trend. GJ is definitely buys. I mean, you could look at GJ if it goes back down and retest this area. You could definitely look at buying it. If we see, what's this one here? Hold on, I can't remember what pair this is. Yeah, I'll just close that and start again. If we take GJ into account, I'm pretty sure all the banks are still on buys. I mean, you just wouldn't switch when it's coming down. All that is is the big institutions are cashing in for profits. They're just taking profits. They're not entering sales, but as they're taking these huge profits, it's then fucking coming down, right? And then you get so they're all in buys. Look at that right there. So they've decreased. The long change has decreased, right? And that's because they're taking profits. That's all it is. If you look here, the shorts have also decreased because they're taking profits. If the longs are decreasing and the shorts are massively increasing, then it tells you that they're switching from longs to sells, right? From buys to shorts and so on. It buys to sells, longs to shorts. But because both of them are decreasing, all they're doing is taking profits, guys. They are predominantly still in buys, and that's why you'd be buying GJ, obviously on top of the fundamental data. If we look here, DXM, Dumb Money Index, all the retailers are in sales. You just do not want to be doing what fucking retail traders are doing. Seasonality, let's have a look. Still buys in August. However, September, we're looking at some big melts. So that would be, and then October flying again, right? So again, you can't just trade off of that one piece of information, but it is something to take into consideration, right? What you may find is, I'll just give you a scenario here. You may get this, September, end of September, October, bang, 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 right? You may get a scenario like this where your August is up slightly, your September's then coming down, and your October's flying, right? That may happen. GBP NZD, yeah, it's not. I had actually take profit mark for this area here. Obviously, it stopped me out because it was counter trend. I wasn't going to let it go, guys. That's why I moved it down. When it's counter trend, I do tend to move my stop losses because they have the highest probability of quickly coming back against you. Right? That's the reason why I do it. When it's in line with the trend, I don't normally do it. I let them run. NZD USD, you would be selling that, so I wouldn't really be touching that, to be fair. NZD CAD, both are shit. However, if obviously oil starts to fly, then you may see NZD CAD melting. Again, not a good pair. I wouldn't trade it. NZD CHF, you'd never buy it in a million years. Yes, it's in an area of value to buy from down here, absolutely. But I mean, economically, you'd never ever fucking buy it in a million years. You just simply wait for it to come up, retest these zones, and away it goes. USD CAD, here, come to here, and then buy. But again, it's horrible, lads. USD Japanese yen, exactly the same as pound yen, etc. Right? AUD Japanese yen, pound yen, euro yen, USD yen. It's all the same, right? Bash, and away we go. USD CHF, there's no real reason for it to be pulling down, so it's probably going to come down here for the retest and then go. You know, it's not in any particular area of value here, of interest here whatsoever. It's just a random move, right? So it's just building up liquidity. It's always doing. They're just gathering up more orders in order to pull it in the correct direction that they want. You don't really want to be buying this pair. Can you buy it from down here? Yes, you can. You just be hedging it because it's a great area of value for buys, right? You'd never be fucking selling it from down here. So if you're not going to be selling it, you're either going to be buying it or you're going to be doing nothing, right? You always have two choices. In this occasion, you're either going to be buying it or you're going to be doing nothing. You would never sell it from down here. And so I'm doing nothing because I ain't buying it. That's pretty. Let's have a look at DXY. So what you may find now, lads, is the USD will probably push down and retest this zone here. The index currencies actually do the exact same thing, right? They'll come down to these zones, look. Boom, boom. So this will probably push down to here. You'll get some news again that the USD is strong, and then it'll start flying, right? And then it'll come up here. That'll be September by that point. USD will then cut rates in September, just the example, and then it'll start melting, right? You get all this. Well, it may not start melting. It will start melting if it hasn't been priced in, but if it's been priced in, they cut rates and it just gives you a little move and keeps going. You'll be thinking, why is that going up? It's because they've already planned for the rate cuts, right, and being priced in. Oil, still happy with it. Like I said, I won't touch it again because we've already covered it. You know the drill, guys. When it comes back in here, this zone, enter, and away we go. Stop loss will be down here at the yellow. British oil is the same. Gold, I mean, it's one of these things. I wouldn't be selling gold right now, but I wouldn't be buying it also. I would not be fucking buying gold in a million years. Because it's way, way overvalued. Could you sell it and do a hedge? Yes, you could, but there's just so much uncertainty right now in the world with all these fucking wars kicking off. There's something else just kicked off in Russia and Ukraine. I know it's the same thing, but something new has emerged from that conflict, right? I can't remember what it was. I saw it briefly the other day. It was about they've taken over some city and blah, blah, blah. And that adds uncertainty. When you get uncertainty, people will invest in gold and so on. Well, the sentiment becomes risk off, right? When it's risk off, they take their money out of currencies and put it into something which is not risky. Gold is not risky. Why? Because it holds its value. USD is just a fucking piece of paper. It doesn't have any value, So that's why it's riskier, i.e. people use it during risk-on periods when they're more willing to take risk, right? Silver. I never look at that, you bastardo. I never took silver. But again, look, I just hadn't looked at it, guys. I wasn't paying attention, so my bad. But look at that. Look, here's your fucking zone. You mark up the area. It comes in, and away you fucking go. You know what I mean? And here's another thing. Look, if you're looking for your entry, here you've got your engulfing candle, right? If you then mark up this blue candle, and you haven't entered on this candle, obviously, right? You need your confirmation. You mark up that blue candle with the engulfing. It comes back in. It retests this zone. There it is right there. You can take that. You can take it here, which is the higher riskier entry. It's higher risk because it hasn't stopped yet, right? And the next candle could pull down here. So it's a higher risk. This one, you could take it when this candle passes this wick, and that's obviously because you've got your confirmation, right? Boom, and away you go. You could, if you want to be even safer, you could wait for this to close. You could wait for the pullback here. You could then enter, and away you go. That's kind of Lee's method, right? When you wait for the pullback and then you enter, when he does like the fake out strategy and stuff. So here it is again, lads. This is a new one for me. I hadn't even looked at silver, but you can see right here, that method works again with a pair that I've never traded before in my fucking life. I've never once traded silver. Don't know how it works. Don't know how it moves. Still, building up that kind of detail just now to see how it behaves. But look at that. It fucking came in yet again, with something that we've never tried before. So the system is phenomenal. Here's another one. Look, Bosch. And there was reasons why we didn't take that. The reasons why we didn't take this, guys, is because of all the chaos that was happening in the markets. That's it. That's why we didn't touch it. It's not that we missed it. I saw them, but there was too much uncertainty in the markets, and that could have just absolutely melted down to these areas here. That's why we didn't take it. It's always better to miss a trade than lose a trade, right? Yeah, they're all just the same. Let's have a look at the US 20. I think this is the bonds, right? Is that US 20-year bonds? So it's coming down to an area here. May reject and fly. We have to wait and see what that does. Japanese 10-year. Yeah, look at all this fucking disaster here. Massive gapping. It's all over the place. So that's pretty much it, guys. There's honestly nothing at all currency-wise that I would trade. There's nothing at all currency-wise I would trade. It's purely oil for me right now. We're just waiting for these currencies to kind of get their act together, see what news we've got. In fact, let's have a quick look at the news, see what we've got coming up. Where are we? There we are. Let's have a look what we've got this week. Give me 2 seconds. This week. PCI, PSI is It's increased slightly for a New Zealand dollar, but it's still weak, right? And I'll just open this up. It's still bearish because it's below 50. What else we got? We've got a lot of NZD news tomorrow. Not a lot, but news that we want to see. PPI. We've got PPI for the euro. CPI final. Core inflation rate. We want to see that. We've got loads of news this week actually that we want to see. So let's see how it pans out. Remember, we do not trade news events as such. We just use it, right, to see it play out. Let's have a look. So this has came up now. So we may find that the next one will be a drop. It could be up, but let's see. Not that we really worry about that. It's just one thing. But let's see how it pans out. And as Brian told us before, cheers for that, Brian. I've never forgot that, mate, that you had mentioned whenever oil gets below $75 a barrel, oil companies are then losing money. So that's golden fucking nugget in itself right there. That's really good information to know. Yeah, that's it, lads. We just need to watch to see how the news plays out. Remember, like I said, we do not trade individual news events. We just like to see the news to get an overall look at the economic direction, right, of a currency pair. So that is pretty much it, lads. Oil's the only one we're looking at right now. You know the game plan. If it hits back down here, enter again, stop loss below the lows, and just ride it out. You know, it may come down here for that little bit of liquidity grab, and away you go. That's pretty much it. Okay, mate. Ah, nice. Aye. Ah, nice, mate. That's it. Yep. That's it, mate. It's all about making that money, you know, and don't ever worry about that. You can always get another entry. And like I said, for anyone on the Managed PAM account, look, these are small orders. We will enter larger, not percentage-wise larger, but because I now know that this only enters one contract at a time, I can then go larger, you know, maybe 50 contracts a piece instead of 15 contracts a piece, and we can enter that. So even though it's going to be a winning trade regardless, the next ones will be more because I will enter a bit more. And I think there's already a winning trade in there, which is closed. I think it was pound NZD. So, yeah, the managed account, this, regardless, even if this comes back and stops us out, that will be 3 winning trades so far. Which, I mean, it doesn't really matter because we don't base it on that, right? We base it on the next, 1, 2, 3,000 trades. But it's a good start nonetheless, right, to the managed accounts. And that is pretty much it, lads. If there is no questions, I will wrap this video up and then we can have a chat, Brian. That's it, lads. If you are watching this video from anywhere else and you're not a member of the Trading Guys, let me just show you what we do here. You can see here, I do live trading videos. So if I'm taking a trade, I will trade the account live in front of your face so you can watch me trade. I've multiple accounts down here. I trade all these live in front of you so you can see. And we also, on top of that, I give the signals so that you can actually copy my trade exactly as we take it. We've got weekly fundamentals, we've got Forex trading books, we've got beginner videos, swing trade education. Beginner videos teaches you how to scalp trade. Swing trade education teaches you how to swing trade like myself. We've got student reviews if you want to read them. We've got an affiliate system if you want to become an affiliate. We've got trade results where all the students post their results in here every other day and week. That's pretty much it, guys. We offer a full month completely free as well so that you can try it out. www.thetradingguys.com and then select the option for your free trial month. Very important that you follow the instructions and you type in free trial where it tells you to type in. If you don't, it's going to charge you right away and there's nothing that we can do to get that back to you because when you pay for it, you're not paying for it to us. You're paying for it to Stripe, which is a separate banking entity. And if you then try to claim it back from Strike, one, we get a strike against our names for you doing something incorrectly. And then two, you will actually be charged for the chargeback. So instead of getting your 97 quid back, they'll take like 28 quid from you and then give you, 60 odd back. So it's pointless. So please make sure you follow the online instructions so that you get your free month. All right. And that's it, lads. www.thetradingguys.com. Have a great week.